The global financial community woke up to historic news today. The Iraqi Dinar IQD has officially skyrocketed to $6.90 per unit, while the Vietnamese Dong also experienced extraordinary gains, with some markets reporting values that were once considered unthinkable. This is not just another currency adjustment, it represents one of the largest wealth reevaluations in modern history. For years, whispers of an IQD and VND revaluation were met with skepticism. Yet, the overnight explosion has silenced critics and created a moment that will be remembered for decades in the financial world. Behind this revaluation are strategic and economic shifts that have been quietly building for years. Iraq's economic stabilization, Iraq's steady oil exports, rebuilding efforts, and new trade partnerships laid the groundwork for a stronger currency. Vietnam's industrial growth. Vietnam emerged as one of Asia's fastest-growing economies, attracting major foreign investment and establishing itself as a global manufacturing hub. Institutional support. The IMF, World Bank, and reports of U.S. Treasury coordination suggest this move was not spontaneous, but rather part of a carefully orchestrated plan. Geopolitical timing. With global economies seeking balance after years of volatility, the timing of this RV may have been chosen to stabilize financial markets and redistribute economic power. The revaluation wasn't just a financial event, was the culmination of long-term economic reforms and international agreements. For investors holding dinar and dong, this development represents generational wealth. Imagine those who held the 5K IQD notes, once worth barely $20, now suddenly valued at over $170,000 each. Such transformations are rewriting financial destinies overnight. But with massive gains comes responsibility. Experts are urging investors to seek financial guidance. Proper tax planning and wealth management strategies are essential. Diversify investments. Sudden wealth should be reinvested into stable assets like real estate, gold, or global funds. Think long-term. Many who experience windfall gains lose them quickly. Building sustainable wealth requires discipline. For some, this RV means paying off debts or finally achieving financial freedom. For others, it could open doors to philanthropic efforts or entrepreneurial ventures. The sudden surge of the Iraqi Dinar and Vietnamese Dong is not only shaking up personal wealth sending shockwaves through the entire global financial system. Oil and energy markets. Iraq, as one of the world's top oil producers, is now in a position of immense power. A stronger dinar means that oil contracts, traditionally negotiated in US dollars, could gradually shift toward IQD-based pricing or multi-currency settlements. This could disrupt the petrodollar system that has dominated for decades and force major economies to rethink their energy strategies. Vietnam's trade supremacy. Vietnam, with its booming manufacturing base, will gain stronger buying power on the international stage. Importing technology, machinery, and resources will now cost less, giving Vietnam the potential to scale up production and further dominate global supply chains. Nations dependent on Vietnamese exports like the US and European countries will feel the effects immediately. Banking sector shifts. Global banks are already adapting. From Wells Fargo to HSBC, financial institutions are rumored to be opening dedicated exchange windows for IQD and VND. Central banks are reviewing their reserves and may begin holding larger shares of these currencies, diversifying away from the traditional reliance on the dollar and euro. Dollar under pressure. Although the US dollar will remain dominant in the near term, the rise of the dinar and dong could accelerate the global push toward a multi-currency world order. Countries like China and Russia, which have long supported data, may welcome the shift as an opportunity to rebalance global financial power. In essence, the revaluation is reshaping global economic relationships. From oil pricing to international trade agreements, the ripple effects of this RV could continue for years to come. While the headlines focus on overnight millionaires, the real story lies in what comes next. Opportunities for an investment surge. Iraq and Vietnam could become new magnets for global investors, especially in real estate, infrastructure, and technology. Stronger regional influence? Both countries now have greater leverage in regional alliances such as ASEAN for Vietnam and the Middle East oil consortiums for Iraq. Public benefits. With stronger currencies, citizens may see cheaper imports, better infrastructure, and improved government spending capacity. Challenges. Economic management. Iraq must ensure that sudden wealth from oil and currency strength does not fuel corruption or inflation. Similarly, Vietnam must manage capital inflows to avoid overheating its economy. Social and political pressure. Governments will face demands from citizens expecting rapid improvements in wages, jobs, and services. Mismanagement could lead to unrest. Global backlash. Other nations may feel threatened by the sudden strength of IQD and Vietnam, potentially leading to trade tensions or renegotiations of existing agreements. Investor concerns. While the immediate returns are staggering, analysts warn of potential market corrections. Sudden reevaluations often spark speculative bubbles, and governments may need to introduce stabilizing policies such as exchange rate caps or staged rollouts. The road ahead is both promising and perilous. If Iraq and Vietnam successfully manage their newfound power, they could emerge as global leaders in the coming decade. If missteps occur, however, the world could witness volatility on a massive scale. The RV explosion of the Iraqi Dinar to $6.90 and the Vietnamese Dong? Its massive gains is more than just a currency event. It is a historic financial shift that has left both investors and world governments stunned. What was once whispered in speculative forums and guru circles has now entered the mainstream, shaking the very foundations of the global economy. For investors, this moment represents both a victory and a responsibility. Early holders of IQD and VND have seen their patience rewarded with life-changing wealth now within reach. Yet, as financial experts remind us, the real challenge lies in what comes next: strategic reinvestment, careful planning, and risk management will determine whether this wealth grows or evaporates in the volatility that often follows such seismic shifts. For Iraq and Vietnam, this is a chance to redefine their place in the world. Iraq has the opportunity to turn oil revenues into long-term prosperity, funding infrastructure, education, and stability. Vietnam, already a manufacturing powerhouse, can now leverage its stronger currency to dominate trade in Asia and beyond. On the global stage, the dollar's supremacy faces fresh questions. As banks like Wells Fargo, HSBC, and Bank of America adjust to the revaluation, and as central banks recalculate their reserves, we may be witnessing the early stages of a multi-currency world order, one where power is more evenly distributed across emerging economies. But amid all the celebration, caution remains essential. History shows that currency shifts bring both opportunities and risks. Inflation, speculation, and political pressures could test the resilience of Iraq and Vietnam if managed wisely. However, this revaluation could mark the beginning of a new economic era, one where emerging nations rise to the forefront and investors ride the wave of a global financial reset. The world is watching. The question now is not whether the revaluation happened, it's what happens next.